G'day folks, welcome back to a weekend review of natural gas. This is the natural gas commodity price, the monthly, weekly and daily charts. And on the monthly you can see here we're still in a bullish mode. It's broken above the CCI moving averages, and the moving averages are also penetrated in the price chart. On the weekly, that's already bullish on the CCI and also bullish on the price chart above its moving averages. And on the daily as well, it's been floating above those moving averages for a number of couple of weeks now, and it's also broken through this previous resistance we had at 29.02. If I zoom out, that's the next key resistance area at 31.94 to be aware of. So still upward momentum to look out for. Now if we go to the micro charts, this is the daily as a reference. So we only take long trades on the intraday if you're trading on the intraday. So you only take long trades in this case based on the daily going in a bullish momentum. So if I put in the long trade arrows there, for example, you would have taken those long positions along those blue arrows where the CCI breaks above the moving averages. And closing it out, a couple of ways you could have done it is when it breaks into that CCI range there, starting to weaken, but notice the price still went up, so you could have used the EMA 9 as an exit point or wait for it to break into that moving average range. That would have been an ideal trade to take on that one. Now in this case you probably would have avoided going long until this point here, as indicated by that blue arrow there. Going long from that point, and it'd still be in a trade today if you're going long on the hourly. Just do note, however, we do have a bearish divergence on the hourly chart. So if you draw a trend line between those highs on the CCI versus the equivalent on the price chart, you'll see that's a bearish divergence. So we may see it fall off. Now it may have already happened there if we drew it up to that point. That may have already been the divergence happening. You'll notice the CCI starting to retrace to the upside. So that may have already indicated a divergence break to the downside. And let's just have a look at the Fibonacci. Had we gone to that high there, you can see there the minimum target range would have been that 23, 38% retrace level. So it's already hit that. So we could probably fairly comfortably take long positions based on that arrow, as I said, if that divergence has already happened. But just be aware that's still a declining CCI. We might see further declines as well, so just be careful of that one. Next we look at BOIL. That's declining on the monthly. There's no CCI for it, but still very bearish on the monthly. On the weekly it's also bearish on the price chart, but notice we've got a bullish divergence, the very long-term divergence on the CCI on the weekly. And on the daily it's already broken above that moving average range, and that's actually as well also broken up through this resistance at 11.03. And if I zoom out, that's the next major resistance at 24.69, and I say it's punctured through that initial resistance at the moment. Now if we go to the micro charts, again using the daily as a reference, taking only long trades if you're trading the intraday. So taking long trades only, and you can see there all those blue arrows. They would have been small little trades or entries if you were averaging down, and the more recent one would have been that entry there, and closing it out when it hits that CCI there, or when it breaks into the moving average of the price chart at that point there. Now at this point you probably want to wait for this EMA 9 to start turning to the upside and be bullish. You can see there the CCI might be weakening, and we'll say probably avoid going long until we see the CCI and also this moving average starting breaking to the upside as well to be more confident. So for KOLD, that's broken above the moving averages of the monthly, but there's no CCI for it on the monthly chart. On the weekly, we did have a bullish divergence here. You can see the price is already starting to bounce, and it's still rising along with this CCI 150 down here. It's also rising on the weekly. On the daily, it's broken down below the moving averages, so very bearish at the moment. No sign of a reversal. It's already broken through that support at 61.65, and the next key support will be 33.95. So I'll keep an eye on that to see if there's any other support levels in this interim period on the daily. If we go to the micro charts using the daily as a reference, we take only short trades on the hourly chart in this case. Again, just interchange whatever time frame you're looking at. I'm just using here as the 1 hour as an example. So you would have taken the short trade there with the CCI breaking below the moving average on the CCI, but also the price chart, and exit. A couple of ways you could exit when the CCI breaks into the moving averages. Could have been right at the very bottom there, or wait for the price chart to break into the moving averages, such as that point there. Now, as I said earlier, you want to wait for this EMA 9 to break to the downside to be more confident, whereas this may start reversing to the upside. So just be careful about going short. And that's why I've got this EMA 9 as a indicator to show momentum or trend. So you want to see this break further to the downside. Lastly, for UNG on the monthly, it's still very bearish on the price chart. Still somewhat bearish or neutral on the CCI, so no major reason for it to go long at this point. On the weekly, however, it's already broken above the moving averages of the CCI, giving us a very minor bullish momentum, and that's also a bullish divergence on the CCI versus lower lows on the price, but again, nothing too dramatic to the upside yet. On the daily, it bounced off this key support at 1257, broke through this key minor resistance at 1520, and in this little area now, and the next major resistance is 2160. So again, the CCI is above the moving averages, so bullish on that level. Going to the micro charts, using the daily as a reference, taking only long trades. Again, putting in the long entries there. You would take only those long trades, and a more recent entry would have been down here, and again closing it out when the CCI breaks into the moving averages there, or if you wish, when it breaks the EMA 9 or when it breaks into the moving averages of the price chart. Now again, as I said before, you want to wait for this EMA 9 to break to the upside like it was here to be more bullish or more confident about going long. This could be a sign of it reversing to the downside, so just be careful about that. So if you got value out of the video, hit that like and subscribe button. Thanks for watching, and see you in a future video.